Okay, so good afternoon. My name is Charlie Bengal Jr., and I'm the CEO of Remax Allegiance. Welcome to the Allegiance Way Show. Two super special guests today. I am pleased to welcome Jody Severini with PNC Mortgage in the Washington metropolitan market, and Darlene Kemp with Atlantic Bay Mortgage in the Hampton Roads, Virginia Beach market. Welcome to you both.
Thank you.
Thank you, Charlie.
For having us.
These two have over 40 years of combined experience in the mortgage industry and have closed more than $750 million in volume. So they know what they're talking about. So let's just jump right in. The question that is on everybody's mind is, can we still close? Are you guys still closing loans?
Absolutely. We're still closing loans. We've even closed a lot of our loans with something known as the e-closing. So a lot of these loans can actually be closed, by electronic signature for most of it, where they just go in, and we've even dealing with some settlement companies that are doing what we call drive-by closings. They only have to go in to sign the notarized documents, and they drive by in the car, get the documents signed, notarized, and on their way. So yeah, we're still closing loans.
Plugging along down in Hampton Roads. What about you, Jody?
We are still closing loans and closing them on time. I've had no loans close late thus far. I've got several purchases scheduled to close this month. They look like on time. A lot of them are they're all being done remotely. And in the case where a buyer might go to a settlement agent, of course, the settlement agents have asked that just the buyer come in to sign documents and the loan officer stay home and the agent stay home. But so far, so good as far as making close dates.
Got it. Very good. That was going to be my next question. Are closings happening on time? So, Darlene, you're still seeing down in Hampton Roads them closing on time?
Right, especially our purchase business. We really want to focus on that purchase business because obviously you don't want anybody, without a place to move into or go to. So our purchase business is still closing. We're averaging 30-day closings for sure. I always put a note in there that, if you really want to help your borrowers close on time, the best thing you can have them do is prepare ahead of time. Have them send in the documents, have them apply for the loan even before they find the house. That way, the biggest issue is just, we've got the documents. It's really easy to get them approved and closed at that point. The only delay, that we might be seeing is, maybe appraisers are here and there. But, the biggest issue on that is we just want to make sure we order those appraisals as soon as we can. So once the pick was done, get them ordered. But we're still closing them in less than 30 days. So.
Got it. Good. Yeah, we were talking on a mastermind this morning with 35 agents kind of around the country about how we really should not be spending time showing homes to people who are not at least pre-approved, right? There is just no reason. We're not doing show and tell anymore, right? You got to be approved to be looking at homes, and like we all should be doing anyway, right? But now we have a really good excuse as to why we want to ask them to do that. So I think probably the second biggest question besides, hey, are we still closing? Rates, they've been a bit all over the place, right? Who wants to start? Jody, why don't we start with you? Talk to me about the fluctuation of rates and kind of, where have they settled this week? Not specifically the numbers much as are they settled kind of a little bit?
Well, first of all, obviously this all started with the coronavirus and the markets being so far off. And a couple of weeks ago when the Dow dropped 10%, typically when that happens, the bond market will rally, but the bond market also collapsed. So there was really no precedent for this kind of occurrence. And all of these factors are happening in the shortest period of time that we've ever experienced. In a 2 or 3 week period, these things are all upon us. So the markets are extremely volatile. The Fed stepped in and bought a lot of mortgage-backed securities, and that actually flooded that market, which declines the demand for those, which knocks down the yield and the value, and rates will go up a little bit. So that's what we've seen, I think, on the refinance side of it, and rates bouncing around so wildly. As we were discussing earlier on the purchase side, rates are still very good, very low. And, as far as all you agents out there, I mean, your buyers can get fabulous rates out there. Refinancing is what's really bouncing around a little bit more. From what I'm seeing and reading and being told by our PNC people, we expect rates to stay relatively low. In the long term, in the short term, it's still going to be, I think, pretty volatile.
Okay.
And that's where we see it right now. It's sort of every day you look and listen and see what's happening. It can be a surprise.
Got it. Darlene, how about your comments there?
Yeah, I mean, I started in this business when interest rates were close to 13%, and we thought they were great at that time because they came down from 18%. So I guess it's all being put in perspective. I can remember when they got down as low as 6%, we thought they'd never go any lower. So, I mean, when right now, we're looking at rates at 3s and 4s and 5s, depending on, what type of loan you're trying to do, where you're trying to go. That's still incredible. It's a great time to buy as far as rates and get locked in there. So yeah, absolutely.
Good. So speaking of locking, when should a client lock?
Now.
Yeah. My famous saying, if you like it, then lock it, and then just don't look back anymore, right?
Yeah.
I mean, most of the people, when they're shopping for a house, they're really concerned about what is my monthly payment, how much cash out of pocket am I going to need? So when we're talking with them, it's really about buying a house that fits that amount. So if you're looking today and you know what your comfort zone is going to be, and you're selling people houses based on their comfort zone for the monthly payment and out of pocket, then, if you got it, lock it in, especially with this volatility. Volatility means it could go up at any time, and sometimes it's going up drastically. So you could take a borrower from being qualified and happy with their payment to all of a sudden they can't qualify for the loan anymore if it goes up too high. So, I've been a big believer that if you like it, just lock it in.
Yeah, Jody, you were telling me the other day that, rates can jump, but they kind of drift down, right? They don't go down significantly.
Traditionally, they go up very quickly and they come down very slowly. So, locking, like Darlene said, it's always a good idea to know what you're going to have. And most banks, I know that the two of us as lenders, we've got something called the float down program, where if you lock your pricing and all of a sudden there's a dramatic drop in pricing, by a certain percentage in cost, and different banks or lenders have different amounts it's got to change, but we have a vehicle that we can float you down to the lower rate. So you've got a hedge against a huge change or a huge drop in the market. And I think discussing this the other day, I know Darlene has done this very infrequently. I've done it 3 times in 17 years. So it doesn't happen that much. So during the process of loans if pricing in that particular loan that you're in should suddenly get better enough that we can float you down, we will. Sometimes there's a charge involved, but it always betters your rate and your cost. So that's usually available with most lenders.
So a big takeaway today is if you've got people that are ready, it's time to lock them. Go ahead and lock that up now. I think you guys touched on it a little bit, but although rates have been all over the place, they're still historically crazy low. Right. And I think it's just so important that we all realize that. I was telling the story that when I bought my first property, and I think it was the year 2000, 8.25 FHA, I was thrilled, right? Yeah. 8.25. Yeah. So, let's keep that in perspective. And I think that's also important for agents to keep that in perspective with their clients. Getting out the historical rate chart is not a bad thing, because rates have been so incredibly low. And we've been saying for years that they're going to go up, right? Year after year after year. The prediction for next year is, well, rates are going to rise, and then they haven't for whatever reason, right?
Right.
Okay. Have any programs changed credit score requirements, and if so, which ones?
I mean, we're seeing changes pretty much every day, and all of them, as far as that goes. When, we're still doing the lower credit scores at Atlantic Bay. I know some people, really aren't, but the thing to remember is that, those lower credit score guidelines, and they're really going to look a lot closer to the guidelines. They're going to stick to those debt to income ratios. One of the biggest things that we look at on these loans is payment shock is a big one. We're all creatures of habit. Your credit scores are nothing but, kind of telling you what that spending habit is. So when we're looking at it, you got to remember that, the lenders and the investors, they're all looking at this as an investment. You've ever heard higher the risk, higher the rate type of thing. So the higher the risk on a mortgage loan, then the higher the rate that you're going to pay on that loan. And one of the things that you'll really see now too is something is they're going to really look at reserves on those accounts. So I know a lot of people live paycheck to paychecks, and if this hasn't taught us anything, is to have a little bit of money in just in case for a month if you're not out of work or two. So that's one of the other things that the underwriters are really going to look at a little bit more nowadays than they used to is, do you have a little bit of reserves to back you up just in case? So, but they are changing program guidelines, as things get a little bit risky. They want to just make sure that people are still employed. That's one of the biggest things that we're seeing now too. We've always had to re-verify employment to make sure the borrower's employed 10 days prior to closing. They've just moved that up a little bit. Now they want us to verify them 48 hours prior to closing and make sure that they're still employed. Sorry about that. It's going to make a big difference. We're getting a little bit creative on how to get those verifications because not all the offices are opened. It's hard to call and do that verbal verification and make sure they're still employed.
Sure.
So some of the loan programs are accepting, hey, as long as we have your last paycheck prior to closing, we can look at that. We can look at your bank statements. Has it been deposited there? But in all actuality, if somebody's paid off and they're not getting or laid off and not getting paid, we can't close on that loan until it gets back. So the biggest thing I encourage, listing agents to do is reach out to your buyer's agent and ask them, has your buyer been affected by this and are they still working? Because that could cause a delay.
Yeah, I think over communicating in this situation and listing agents calling the buyer's lender directly, right? Not just if you're sorting through multiple offers or the one offer that you get, but throughout the process, I think checking in is a good suggestion there. Jody, anything to add on kind of programs changing credit scores and even employment verification and how you all are handling that?
Well, I've seen a couple of lenders raise their minimum FHA score. We've left ours where it is. So I've seen some credit score pricing changes on our jumbo, but it's not that you can't get the loan. You just pay a little bit more for it, maybe a quarter of a point pricing.
Okay.
And not rate, I'm talking about in cost, a little bit more, but they're still out there. As far as employment verification goes, that typically was done by a team here at PNC, and that's changed now. Now the processor can do it. They can take an email directly from the client's, from the borrower's place of business, and we can take the most recent pay stub or direct deposit into their account, showing that they're still, being paid. And so we've become much more flexible in that respect also.
What about, and I don't mean to put you on the spot, and if you all don't know, that's fine. What have you heard about, whether it's with your bank or others, if you're furloughed, can you close?
Well, I've been told, I don't have a specific answer on it, but I discussed that with Charlie Crow just yesterday, and we're thinking no. I mean, if you don't have a pay stub, it's sort of irresponsible for a lender to make a loan to you. That's going to be nothing but trouble. So that's sort of what we're thinking right now.
Got it. Same with you, Darlene.
Yeah, I mean, if you look at it, we're still in such an unknown. And when you're in that unknown and uncertainty, you don't know when they're going to be able to go back to work and what kind of money they're really going to receive. So the last thing you want to do is put somebody into a hardship right now. So if there's a lot of people that are still getting paid or working remotely and everything's as normal, it's just a matter of trying to verify that, and those are fine. We'll make those work. But if they're not getting paid, we don't want to put them in a hardship. We're using that money and have to prove that it will continue in order to make the mortgage payment.
Yeah, agreed. Because what's happening is these companies are announcing furloughs, and they don't know when they're going to bring them back, right? Disney is getting ready to do that. Macy's has done that. Bloomingdale's has done that. So it does make sense. If there are any questions, I thought we would have tons of questions from our viewers. We don't even have one yet. So if anybody has a question, type it into Facebook. We're using StreamYard. I can see your questions or comments as you type them. When we were using Zoom before, I couldn't. So this is quite an upgrade, and we're thrilled to be using this new system. Jody, I'll start with you on this next one. Talk to me about jumbo loans. How's the jumbo market? I've heard that some banks are pulling out of it.
Oh, I've heard that some banks have pulled out of it. PNC has not. Fortunately for me and for us at PNC, the mortgage business is a small part of our total business, total portfolio. So we are still making jumbo loans. The pricing is tremendous, and we have no problem with that so far. But I know some smaller lenders are not.
Okay. Darlene, any comments on jumbo?
Yeah, I mean, the biggest thing about the jumbo loans is that, they can't be sold on the secondary market to Fannie Mae or Freddie Mac. So the availability of that money is going down. So we're still doing them, but like you said, they're fewer and far between, and the rates are a little higher because they're a little risky right now.
Okay. Darlene, I'm going to start with you on this one. What's going on with VA? You do a ton of, and we actually just got a question from Steve Flasterer, who is an agent in DC. What's going on with VA loans? I know you do a ton of VA loans down in Hampton Roads.
Absolutely. I love my VA market. We're a very highly military area. My husband's retired military after 20 years, and he's working with us now, but love the VA loans. We're still doing regular VA loans. We were doing the VA renovation loans, and they actually stopped them. I had one in the pipeline and got a phone call. Sorry, we just can't do them. What VA really doesn't want to do, they're looking out for not only the borrower, but also for either tenants or sellers and the appraisers. So they really are looking out for the appraisers having to go into properties where they don't know if somebody's been sick or not sick. And then you have people that are living in properties. They don't want strangers into their houses and stuff. So they just felt that was a little bit risky right now to have to go back and have to continually re-inspect after work has been done and things like that. So they've completely stopped doing their, stop ordering appraisals on their VA renovation loans. So they've pretty much gone away, as well as their cash out refinances. They're having an issue on that one. But we're still doing the VA purchase market. Again, higher the risk for some reason. Right now we are starting to see a little bit higher price on our government loans than what we're used to in comparative to our conventionals. So where now our conventional loans, if you put them side by side, sometimes the conventional loan is going to be a little bit better than the VA, just depending on the borrower.
Got it. Jody, anything to add on VA?
That just about summed it up. We're still doing them. I never did the VA loan that you talked about, the recondition or whatever it's
renovation.
Renovation. Excuse me. But the others we're both still doing, and pricing looks very good to me.
Good. Okay. So the only issue with VA is maybe a little bit of interest rate fluctuation there, like the others, and the renovation loans are paused for the moment. It sounds like.
Correct.
Okay. Well, this is an interesting question because we're kind of going to get into this. What if the buyer loses his or her job a month after purchase? Can they receive a forbearance? So talk to me about what's happening now. Lots of job losses, right? Between last week and this week, I think 10 million claims for unemployment, right? So this is nothing new. What are banks doing, whether it's PNC or Atlantic Bay or just in general? I think that we all realize coming back from 08 and 09, we don't want all these foreclosures, right? It can't happen. I think the banks all learned a terrible lesson back then. We want to keep people in their homes as much as we can. So if somebody's in trouble, first, what are you all seeing? And I'll start with you, Jody, when it comes to people who perhaps can't make their payments.
Well, the first thing they should do is contact their lender and make sure that the lender is aware of that. And at PNC, we have a forbearance program where they're going to be allowed to not make a payment for up to 90 days as long as they qualify, for that. So they need to contact their lender, find out what's happening. They need to apply for that program. And that program also pertains to car loans and non-secured lines of credit and credit cards. Everything across the board, not just mortgages. So get in touch with your bank or with your lender and let them know the situation that you're in.
Darlene, what do you have to add to that?
Yeah, same thing. If you've got somebody that is having a hard time, making that mortgage payment, the first thing I always say is tell them to take a really deep breath. It's a really scary position to be in, to think that you can't pay the bill. So that's, first of all, deal with that. But the first advice, contact the servicing company of the mortgage. And in reality, let them understand that they may be on hold for a really, really long time. Again, they're getting a ton of phone calls right now. They're really, having a lot of those phone calls. So they might have to be a little bit patient on that one, but contact them. You can also direct them to some really good sources, but tell them to watch out for the scams. This is the time that you're going to see, a lot of people saying that they can do things for a fee and things like that. So just tell them to watch out for the scams. I always have them go to the Department of Housing and Urban Development or the HUB website they can actually pull a list of HUD counselors that can help walk them through. If they're having a difficult time talking to their servicer or their mortgage company on their behalf, then they can reach out to a nonprofit organization or an approved HUD counselor for that one. And then during the last crisis that we had, one of the things that the government did was put into place the Consumer Financial Protection Bureau.
Mm-hmm.
And what they're to do is to protect the consumers from unfair, deceptive, and abusive practices. And so they've got a lot of information on their websites that gives you like steps and tools and things that you can do in order to help them make good decisions. So just leave them to that website as well. So, and keep in mind what a forbearance is.
Yeah, I was going to ask you. Can one of you get into that a little bit?
Yeah, forbearance doesn't mean free. A lot of people misunderstand that. So mortgage forbearance, and again, this is according to the CFPB, the Consumer Financial Protection Bureau, is when a mortgage servicer or a lender allows you to pause or reduce your mortgage payments for a limited period of time. So a forbearance doesn't mean it's going to erase what you owe. You have to repay any missed or reduced payments in the future. So if your income is restored, reach out to the servicer and start those payments right away. So I think there's a lot of misconception that it means free, and that's really not what it is. So contact your service provider, as soon as possible, and find out what their guidelines and programs involve.
Right, and I know one of the challenges is even if banks or services are doing forbearances, those servicers still owe their investors the money for that month, and that is a hidden crisis that is apparently happening. I understand that banks are okay because they're protected by the feds, but servicers who are not banks have themselves a problem, and they're looking for Congress to be able to kind of close that issue so the Fed can kind of back them up. So there's lots going on behind the scenes that impact all of this stuff. And when somebody can't pay their bills, it really is, the domino effect of, when somebody can't get a paycheck, they can't pay their bills and this and that, which is why I'm hoping that the payroll protection program that so many businesses are applying to is able to allow us to be, continue to pay employees so they can then meet their obligations as well. There were a couple other questions here. Let me scroll back up. One of them was, where do you see the rates going? And I don't think anybody here has a crystal ball. The person that asked that question joined late, and the lesson was lock now if you can lock, right? Because we just don't know what's going to happen. What about cash out refis for primary as well as investments? Are you all or are banks in general still doing cash out refis for investments? Do you know?
We're still doing them.
And we are not.
Okay. Yeah. Okay. And I imagine that, what's the equity requirement on that, Darlene? Do you know?
75% on a single family. Yeah.
Okay.
And that was before it. So yeah.
Okay. So it's mostly business as usual, right? Rates are going to continue to fluctuate. Most of the programs are not going away. Rates are going up a little bit. What else to kind of wrap up? I don't think we've got any more questions. So Jody, any closing thoughts?
No, I think if you see a property out there you like and you can get it, I'd get it. I mean, pricing is very good right now. It's in Northern Virginia. It was quite a seller's market for quite a while, and I don't see that changing. So it's tough to win a contract, but if you can, pricing is good. We're closing our purchase loans on time. Purchases always get priority with all lenders. Refinances, get pushed to the back for a purchase, and that's just the way it is. So I'd say if you can find a house and you want it, get it.
Yeah, absolutely. I agree. Like I said, I started in this business selling houses at 13%. We thought that was awesome. So interest rates make, a big difference. So it is, in my opinion, a good time to buy. We want everybody to be safe and to be careful and to, understand the guidelines, and some of the things that they're doing as far as closings and things like that is to protect everybody. But it's still, and I say it's always a good time to buy a house and a home. So
Yeah, I mean, if you're in this thing for the long haul, which most people are, we had 1,300 properties go under contract between Thursday and Tuesday, 35 within 35 miles of the White House. So the market is still moving. For those of you that don't think that it is, and what Jody was saying a minute ago, with things being so competitive just a month ago, right? We're still seeing multiple offers on some houses. Unfortunately, that is still happening. It's happening right now. However, it's not as bad as it once was. So I do think that there are great opportunities for buyers right now. And I did a mastermind this morning with, I'd say, 2/3 of the participants were Allegiance agents and the other third were agents from around the country. And I asked the question, how many of you, and there were 35 or so people on, how many of you think that housing prices are going to be going down? One person raised his hand out of 35 experts. So, that is, so for people that are watching, I think that's a good stat, right? We asked 35 experts around the country. One person thought that pricing was going to go down. And the second stat, the 1,300 properties within 35 miles of the White House going under contract. Somebody's asking for contact information for Darlene. We're going to put that and contact information for Jody in the comments. I've worked with both of these individuals for a number of years. You guys are class acts, professionals. I appreciate you being on, and hope you all have a great weekend. Thanks again.
Thank
you.
Thank
Take
you.
care. You guys.
Bye-bye.
All right. Bye.